value goddess. Also joining us in a little bit is going to be Todd Bunton. He is our growth and income and earnings expert. But first, it's me, and I'm going to talk a little bit about the IPO market and what's been going on there. Made a couple charts, thought they'd be interesting to all you investors here. So let's go ahead and dive right into it. These are the IPOs that came out last week. And I've got a few red numbers in there and then just a couple greens. So, why are those numbers red in there, especially for PRAH and Sky Solar? The basic idea here is that we see a few issues that priced below the offering range, and that's never good. That was the case in PRAH. Sky Solar had a significant amount of trouble, though, reducing the number of shares that they offered and reducing their range. They did price out at the top end of the range and just a slight premium there at the open. But those are generally bad signs. And when we see much more red on a screen like this than green, we know that there's a broad market weakness. Only two names here really had any sort of green in it. AXTA, which is pipeline, stuff like that. They have they increased their offering size, and that's going to be based on demand. The other green indicator here was Virgin America, and airlines have been doing quite well recently. So they priced right in the middle of their range, but then opened strong to a $27 price, above the range of 21 to 24.
Speaking. Could there be any better time to launch an airline, though?
Right now, this is
gosh.
perfect timing for Virgin America. We've seen all the airlines move significantly higher, not only on the price of oil and how that has come down, so that's going to help their margins at some point, but there's also a high load factor.
Right.
All those airlines are filling their seats, so it's a win-win-win for Virgin America to come at this sort of time.
Yeah.
My next real quick chart here in the IPO market, there's probably about 5 or 6 deals that are probably going to come this week, but I wanted to highlight these three. ADAM, a fairly large offering with herbicides, but there was a significant amount of buzz with this one. We also had the 60 Minutes report talking about table water, or the water that's underground is being pumped up. So this is kind of another one that's in that Monsanto type of range. You're going to hear, are these things, while they're needed out there for the farm, is water needed more? What's going on there?
Okay.
Skis, SKIS, is a ski resort.
Right.
It's a great
Good
ticker, right?
Love
We always love to see, like the one from last week that you did on your value.
Plow.
Douglas Dynamics. Plow had nothing to do with Douglas Dynamics,
No.
except for that's what they make, right?
Yeah.
And then finally, Habit Burger Grill. We've seen all sorts of restaurants coming lately.
Yeah, really hot.
A really hot space, almost bubblicious here in the entire grouping. But this one's a small offering, a pretty tight number of shares there at 5 million and raising anywhere between $14 to $16.
I've never heard of them. Are they in a certain part of the country, do you know, or?
I didn't look that deeply into them, but I just noticed it was a restaurant, and we've been talking a lot about the restaurants, so I figured
And I know
I'd
Shake
include it.
Shack is thinking about doing an IPO, so
Right,
maybe they're going
Shake
to be
Shack
watching
is
this one.
all over it. That is the one
Burgers.
that's more New York City
Right.
and the Upper East Coast. So you've seen a lot more spin and buzz on them particularly.
Yeah.
But joining us now, is Todd Bunton. We also love to follow Todd's growth and income portfolio here at Zacks, as well as the Surprise Trader, which Todd looks at all the earnings of all the stocks and says which ones are the best ones to be in on. So Todd, what did you see last week?
Well, I'll get to that in a minute, but first I just want to do kind of a broad overlook of what we're seeing here in third quarter earnings season. It's continuing to wind down. We now have results in from over 92% of the S&P 500. But all around, it's been a good earnings season. You can see we have companies beating more on the top line than they have over the last 4 quarters, companies beating more on the bottom line than we've seen. 71% positive earnings surprises. That's the highest ratio I've seen in a long time. And if you look at the growth rates, they're not bad either. About 7% bottom line growth expected this year, this quarter, 4% top line growth. So again, very solid numbers here. Most companies have reported, most sectors have reported. The remaining, 7 to 8% of companies left are mostly in the retail sector, which we'll we'll see over the next week or two. The one caveat this quarter has been the decline in estimates for next quarter. So you can see back in late September, analysts were looking for about 10% earnings growth for fourth quarter. That's come all the way down to 4% today. But again, this is a trend that's nothing new. So we've seen, pretty solid, earnings beats. About 67% is the 4-quarter average, like we saw on the previous slide. But estimates come down for next quarter. We've seen that for about the last 2-3 years. So this trend isn't anything that's alarming. It's just you'd expect this to eventually flatten out, and we see rising estimates after a solid quarter like this. But all in all, not a bad earnings season. Again, the numbers are coming in solid. Kind of winding down on the S&P 500. Watch out for the retailers coming up, and those small caps still left to report.
Yeah, small caps, that's my spot. That's the thing that I look at. And, I have noticed that there has been a lot of beats in that sector, not that many misses. So kind of keeping in with Todd's idea, the overview, the scorecard there, many more beats, and I think that's kind of also what Todd's been talking about was that the lowering of expectations.
Right.
I think for the most part that we saw a lot of expectations come in, just a few weeks before the end of the quarter.
Yeah. So what's on track for this week then? He was talking about the retailers.
Right.
We got a lot of those big names.
This week we've got a lot of those. Today we have a few Chinese names here. Chinese Media Game Corp, that's CMGE. JD.com is also another one.
Right.
And then Tyson Chicken. After the close today, we got Allergent. Tuesday it kind of gets back into the swing of things with a few big names in the retail sector. Dick's and Home Depot, Medtronic, and then in the afternoon we also have more retailing names. Wednesday we pick it up again, more retail. I think we're going to see a lot of action there on that Target and Staples and Lowe's. I put in Lightbox, LITB. It's one of those small caps. That's one of those names that I think you should have on your radar list for this week. I don't know if it made it to Todd's Surprise Trader or not, but that's something that I've been following. In the afternoon, CRM, of course, and then Green Mountain, always interesting, and a few others there. Thursday, we have our more well-known retailers there. Best Buy, Sears, Dollar Tree, all of those in there. And then in the after, I also put in, LQDT is a name that I held in the past in Home Run Investor, Liquidity Services. So. That will tell us, if the government supply market, where are they on, getting rid of the surplus materials.
Okay.
Finally, on Friday, and as well as Thursday, Zoe's, of course. They're sticking with our restaurant world. They kind of pre-announced already, so we know where that one's going to come in a tight range there, but still could be a little bit of upside inside of that number. And then Friday, Berry is Berry Plastics. A name that I've been following. Another one that I think has got a real good chance of posting a very large positive surprise. Not only was this made a Goldman Sachs conviction buy, it was also upgraded by Barclays recently. And last week there was significant volume in the calls, March 30 calls for this stock. So I think there's a lot of action in around a name that you wouldn't expect to see.
Right.
It's a plastics company.
Yeah.
And as much as that was big in The Graduate, not too many
Long time
people.
ago.
Yeah, right. Not too many people are keying in on the plastics thing right now. But obviously, the price of oil, as that moves down, the input cost to make plastics moves down as well. So we're looking for possibly a guide higher on that, as their input costs are going to go lower.
Okay, that's a good one to watch.
So
I think we have some charts here.
Right.
JD.com, you were mentioning, they reported this morning.
Okay.
It looks like they did beat, and shares got a little bit of boost, but then we're not up that much pre-market. I just put the chart up here because this was their first report. They're similar to Alibaba over in China, so everybody's all interested in these types of companies. It wasn't bad. I wasn't overwhelmed by it though.
Right. It
And
wasn't.
then you can see investors don't look all that
Right,
overwhelmed
a
either.
little bit of trepidation in there. Obviously, coming public, you can see that big line up there.
Yeah.
But then reaching a peak and then getting hurt a little bit, but not really that bad in October.
Yeah.
But then not really rallying back to highs.
No.
I think that would be your indication of a little bit of weakness inside of that name.
Yeah, it'll be interesting conference call on this one to see if there's anything that might spur the stock.
Next up, we've got Home Depot.
That's a beautiful chart. That's why I chose this one. I mean, they haven't missed in 5 years. They had that one meet in 2012, it looks like.
Right.
And then, it's just been off to the races,
off to the
all-time
races.
highs here.
Right, and obviously this is a nice, broad play on the economy here. With housing prices, stabilizing for the most part. You're also seeing people, revamp their house or redecorate or redo certain areas. So you're going to see a little bit of that inside of these numbers, probably.
Yeah, and the home equity loans, the number of those has started to increase again, and that's where they're going with that money.
Exactly. Never mind about their credit card issue.
Right.
Jack in the Box.
Yeah.
How about it?
Look at that chart. Wow, that's
the Jack was in the box probably a couple of years ago, but seems to be springing out lately here. I mean, it's a little up and down with a couple misses recently, but it looks like those big misses, they might have those a little bit under control. But you can see the valuation here in the stock, at least just in the stock price, moving over the last year from 50 to over 70.
Yep, these are hot.
These are hot.
I don't really get it, but everybody loves the restaurants. They just do. They're willing to pay 40, 50, 60 times.
Yeah, it's crazy. Todd, are you going to Jack in the Box that much, or is that
I am not,
sure?
but don't forget that they also own Qdoba, which is kind of Chipotle's main competitor.
Yeah.
So maybe that's driving sales. I haven't taken a look too much. But with the earnings ESP on this, and I've talked about this before, this is what I look for in Surprise Trader. Basically, I take the most recent consensus and compare it to the Zacks consensus estimate. For Jack in the Box, it's 0%. So basically, they align. So not seeing, if this is going to be another beat or a miss. You can't really get a read on it coming up here. We'll just have to wait and see.
All right. Next up, we have the Green Mountain, the Keurig. This has been one of those stocks that's always been in the news. You had David Einhorn shorting it like crazy in the past, and there's a constant call that this is something that's completely overvalued and a business model that is, doomed at some point. But if you look at Tracey's chart here,
they have a good record.
They beat it.
Yeah,
they've been beating it, and you see big beats in there too. With the number of segments on each one of those green lines there. I think it's like 5 and then 10% and 20, and then the gigantic straight up line there. I think that's like an over 50% beat, or positive earnings surprise, as we like to say. But obviously, you've got some big beats in there, and the stock price is rolled in there. When you have big beats,
reflects it.
Yeah. Moving ahead, then Williams Sonoma. Tracey.
Yeah, I put this one on there again too because it's a juggernaut. They met last quarter, and Todd and I have been discussing Williams and Sonoma. We do every quarter because they own West Elm, Pottery Barn, and Williams and Sonoma. Williams and Sonoma isn't even their good brand. It's really West Elm, and that's seen like double-digit sales increases the last I want to say 3 or 4 quarters at least. When will it slow down? I don't know, but as housing continues to recover, this is the kind of thing people want, the couches and the furniture and all of that stuff, and they have really strong brands, right? Todd, what do you think about when you see this kind of chart?
Yeah, it's very impressive. I mean, you see that they broke the string of beats last quarter with a meet, but looking at the most recent consensus on this one, it is about a penny ahead of the overall Zacks consensus estimate. There is a positive earnings ESP on this. Could be another positive surprise in the making for them. And again, and you guys talked about this with Home Depot with renovating, but also with the improving economy, stability in housing and improving labor market, you'd expect a company like this to do well too. So this could be a one to watch this week.
Yeah, absolutely. My personal take on this, when I see the chart like this that gives me all these beats and then that meet, and the stock really hasn't done anything since that time,
right.
I'm going to be just a little bit more cautious than you two. I know you guys are all into it, but I'm going to back off just because I think they're going to be managing earnings as best they can over a number of years. 4 years of very well managed beats. And then to meet is, it's like, I think we're maxing out.
Okay.
And so that's my 2 cents on that.
You think that's the sign of
I think that's
running
your
out
sign
of gas.
right.
Okay.
The tank is low,
okay,
if you will. Just
all right.
Just looking at the chart, not looking at any of the numbers or anything.
Right, exactly. Yeah.
And that's all we've got.
Well, Todd is going to talk about what some people that beat last week or missed and what happened with them, because I know everybody's always interested. You know, we talk about all these companies and then, well, what happens?
Right, so what does happen, Todd?
Well, yeah, I took a look at the companies that beat last week, like we talked about. Not only ones that beat, but that also saw huge increases in their earnings estimates. That I'm having a little technical difficulties here, but I will say Meritor was one of them, MTOR, Motorcar Parts of America, MPAA. That was a big one. So a lot in the auto space. But also on the flip side, companies that missed expectations and saw a significant decrease in consensus estimates. Those are your Zacks number 4s, number 5s. I having trouble remembering those off the top of my head, but those are ones you want to avoid. And basically, what this means is, you know, consensus estimates are falling. Analysts are slowly lowering their estimates. Those are stocks you want to avoid. Those are your number 4s and 5s. The sells here at Zacks, but you know, every quarter or every week we'll see you know, these earnings beats or earnings misses. Those are important to watch, but really you want to focus on those analyst estimates after the quarter to see, you know, where the stock's headed.
Todd, for someone who doesn't know, how long does it usually take? Let's say a company misses. So let's just say today, misses or beats. So Tyson's beats today. Let's say they raise. How long until those new earnings estimates kind of come into the system and they can find them on Zacks.com?
Yeah, it's usually 2 to 3 days, I would say. Usually the larger the stock, the more analyst coverage and the quicker those estimate revisions will be. And that's when you'll see a lot of times a change in the Zacks rank. So you'll see maybe a company, oh, they delivered a great quarter, they beat, why are they a Zacks rank 3? Well, it's because those earnings estimates haven't entered the system. Like I said, usually about 2 to 3 days you'll get a good read on where consensus estimates are going. And usually if the positive estimate revisions are strong enough, it could send the stock higher over the following 1 to 3 months. So it's not, you know, you don't have to feel like, oh, I already missed out on this stock because you know, they popped after earnings. There's you know, a well-documented anomaly known as the post-earnings announcement drift, where you see stock prices continuing to rise along with those consensus estimates.
So technically, you could swim out to that boat before it is sailed out to sea, right?
That's exactly right.
Okay,
yeah.
good.
It's more of a momentum play.
And then on the flip side too, when a company misses and then guides lower, it's kind of the indication, though, for that your ship has been shipwrecked a little bit, right, Todd? Or
Yeah, those are ones you want to avoid, and you know this is something that that was tough for me as I do consider myself a value investor. It's when those companies miss and, oh, their stock's down 20%, and you think, oh, now's the time to get in. Well, really, our studies show that those are stocks you want to avoid at least over the coming weeks and months until, you know, at least those earnings estimates bottom out, and then you might want to consider getting in. But if a company misses and estimates fall, traditionally just get out of it and wait for that turnaround.
Well, the stock market's open. Shares
Yes.
are being traded.
What will we discuss next week? Earnings is kind of winding down here, so.
Well, I think the turkey gods will probably be calling next week. You know, so we do have Black Friday on the
That's
horizon,
right.
and then
It's big.
Cyber Monday, and
Yeah.
all the nonsense that goes along with the sale, the rush to get in, and
Right.
obviously retail stores being open on Thanksgiving.
Right, it's a big
you know,
story.
Something that we haven't really seen so much, but
Yeah.
and then after that, you know, the Santa Claus rally is probably
Right.
just around the corner. Is Santa going to deliver? Todd, is he going to deliver?
I think so. I think we end the year higher than we are now. The underlying fundamentals are strong. We've got the momentum back in the market. As long as the overseas concerns don't weigh us down. I know Japan just released data. They're officially in a recession now. I know their central bank's trying to prop it up, but you know, it's the overseas stuff that concerns us. But right now, the U.S. economic data, the earnings data that we looked at, it's all pointing to higher stock prices by the end of the year.
Tracy, do you think Chris Kringle's going to pay a visit to
Yes, I do.
Wall and Broad?
I think he's going to think, you know, Wall Street they were good this year.
They were good
Yes.
boys and girls.
Yes.
All right. No coal, and avoid those coal stocks, right?
That's right.
Okay.
Yeah, I wouldn't buy those.
So that looks like fun. So make sure you join us next week for another edition of Zacks Live.